Hello everyone. Hope all of you are doing fine. Let me take you through the fixed income outlook for the month of August. Friends, we are going through challenging times as the markets are testing extremes. Globally, equities have done very well while the fixed income is going through stress. However, India markets are doing fine. If we look at the US, the key cause of concern was the inflation. And the recent data of June, the headline came at 3%, while the core was at 4.8, suggests pressures are abating. However, the GDP data for Q2 calendar year 23, which came in at 2.4% versus the expectation of 1.8%, indicates the economy is strong. We had FOMC meeting for the month of July, and they delivered much anticipated rate hike of 25 basis points and took rates to 5.25 to 5.5, and keeping the space open for future actions depending on data. Other central banks, such as ECB, hiked rate by 25 basis points, while Japan kept the policy unchanged. It signaled flexibility on the yield curve control, resulting in some spike in the yields. Bank of England is also expected to hike in the upcoming policy. In a nutshell, we are close to peak of rates. However, the bar for September hike is high by the FOMC, and the markets are also not discounting the same as of now. Now, let's see how domestic economy is doing. Banking system liquidity is comfortable, and RBI is actively managing it and not allowing it to get it loose with active VRRR auctions. So far, we have been in a sweet spot. However, upcoming inflation data can cause some disturbances. We may get a spike in CPI next week, given the volatility in vegetable prices, especially tomatoes, and the number could be around 6% mark. Globally, commodities, especially crude, have also been rising, which can disturb the apple cart if this sustains for longer. We have MPC next week. We do not expect any rate action. However, the commentary on inflation needs to be watched. We believe RBI may look through the noise and keep the eye on the bigger picture. The yield curve is relatively flat, with 1 to 10 year yield in the range of 690 to 720. We expect yield to trade in a narrow range in the near term, and then a parallel downward shift as the expectation of Fed pivot and RBI change of stance increases over next few months. Friends, we are near peak of rates, and one shall look to increase duration of the investment portfolio in line with the investment horizon. Please also look at hybrid funds as per the risk appetite. At last, I just want to add a famous doha in Hindi. धीरे धीरे रे मना धीरे सब कुछ होए माली सींचे 100 घड़ा ऋतु आए फल होए. By saying this, what I mean is, keep sipping, keep investing, and it shall bloom when the time comes. Thank you, stay safe, stay invested.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.